Hello. Today we're going to walk you through a technical analysis of Carisma Therapeutics, ticker symbol CARM. It's been an incredibly volatile stock over the past 3 months.
That's right. The period was marked by dramatic price swings. It all started on June 4th, trading at just 18 cents. Then it exploded to a high of $1.27 on June 10th before closing at $1.11. Following that spike, it entered a prolonged downtrend, bottoming out around 23 cents in mid-August.
But the most recent action is what's really grabbing attention. On September 2nd, the stock surged again, opening at 0.5423, hitting a high of 0.556, and closing at 0.4539. This wasn't on low volume either. We saw over 315 million shares trade hands, suggesting a potential trend reversal.
Absolutely. The volume tells a crucial story. Those two massive price spikes in June and now in September coincided with the highest volume days. The quiet downtrend period had much lower volume. This recent surge on high volume indicates strong buying interest and could be the start of a new upward move.
Let's look at the moving averages. The short-term averages, like the SMA 5 and EMA 5, are both well below the current price, which is a bullish short-term signal. The medium-term averages tell a similar story. Even the longer-term 200-day averages are just below the current price, suggesting the stock is fighting to recover from that longer downtrend.
Now, the technical indicators are a bit more mixed, but lean bullish. The MACD histogram is turning positive, which is good. However, both the RSI and MFI are deep in overbought territory, suggesting the stock might be due for a pullback. The CCI is extremely high, showing powerful upward momentum.
So what does this mean for the next trading day? Given the strong momentum but overbought conditions, we might see a slightly higher open, perhaps in the range of $0.45 to $0.47, but we should be cautious for a potential pullback or consolidation.
In terms of key levels, immediate resistance is at that recent high of 0.556. The major resistance, however, is way up at the June spike high of $1.27. For support, watch the previous close around 0.454 and then the 200-day moving averages around 0.41. A break below that could see a retest of the 0.23 low.
Based on the average true range, the potential high for the next session could be around 0.505 with a potential low around 0.403. But given this stock's history, we should be prepared for moves outside that range.
Exactly. Finally, let's talk scenarios. The bullish scenario is a break above 0.556, targeting higher prices. The bearish scenario is a pullback from these overbought conditions toward the 0.41 support. Or we could see a neutral scenario where the stock consolidates between 0.40 and 0.55 to work off the overbought conditions.
In conclusion, CARM has shown strong recent momentum, but the overbought readings suggest caution. The overall trend appears to be turning up, but traders must watch key resistance and support levels and practice strict risk management due to the stock's inherent volatility.
Exactly. It's a high-risk, high-potential opportunity that requires careful watching.